Welcome to Setnor Byer Insurance Risks, the No Risk Zone, a podcast. This is our inaugural podcast, and we have a very special guest with us, Alec Bogdanoff, who's a Ph.D. I hear from MIT. Is that true?
That is, and I also hear that you get your intellect from your maternal aunt.
And that would be me, right? Thank you so much. First time you told me that, I misunderstood the joke. But anyway, we're here to talk about something that I think should interest our audience, and that is climate change, sea level rise, something called resiliency, which we'll define, and its impact on insurance. We're somehow going to bring it back to insurance, even though today is more about climate change, right? So the question is, first question, broad question, is climate change real, not real, threatening, not threatening? You have the floor now, Alec.
The truth is, in South Florida, I focus on sea level rise. It's one of the most visible signs of climate change. As the earth warms, ice on land melts, goes into the ocean, and also heat will expand our oceans. Those two things together will cause the ocean to ultimately come onto land.
And, well, go ahead, I'm sorry.
Oh, no. I mean, the truth is, yes, climate change is here, and that shouldn't be our question. Our question should be, what are we going to do about it?
But climate creates the sea level rise.
Yeah,
right?
Absolutely.
Well, some people call it weather versus climate. Is there a difference, just so we know we use the right jargon?
Sure. So weather is what you see on a day-to-day. Is it windy outside? Is it not windy outside?
Gotcha.
How much rain are you going to get tomorrow? Climate is, what are you looking at in the future? What is the normal? You know, when you define a normal, like in risk, you want to know what is the chance of something happening. So on a day-to-day, it's the chance of that day. And you want to know, how does that chance look over 30 years? That's climate.
I know that we're in South Florida. A large part of our economy, our robust economy, is based on tourism. It's based on this beautiful ocean, based on A1A. And this applies all the way up the coast, all the way to New York. A lot of us coastal rely on that. And I guess my question is, are we a little late in addressing this? Because I know for 20 years ago, it was all fiction. There were arguments. Is it possible the people say there's no climate change are right? Is it possible? And this is apolitical, right? Because our family has a whole bunch of different political parties and affiliations, and some of us have no party affiliation. But so it is an apolitical discussion. Is it possible the people that say there's no climate change are right?
Unfortunately, no. Scientists call it multiple lines of evidence. So what we've seen now is we have multiple lines of evidence that tell us our climate is changing.
And knowing that is valuable to maybe affect what will happen to us ultimately, impact what will happen. And that's called resiliency, right? Maybe you can give me the definition of resiliency, the way you see it?
Sure. So for me, resilience is prospering through adversity. You know, the truth is, we're not going to stop hurricanes. We're not going to stop floods. But what we can do is we can prepare for them the best we can.
And reduce the risk, back to insurance, because if you can reduce the risk, which is a chance of an economic loss, then the associated premium cost should be more controllable. That's about the only correlation I have for anybody right now. So I'm going to go back to the issue, is what can we practically do, affordably do as a community to, I guess, protect ourselves against this risk? Do we make ourselves resilient?
I mean, as a risk manager, you know that the first thing you need to do is understand your risk.
Right.
And so we need to, as a community, better understand what are the risks associated with sea level rise, with climate change. We know that we're going to have hotter days. We know that we're going to see more what we call nuisance flooding or tidal flooding. As sea levels rise, we'll see more of that.
Right.
So first we need to understand what the risk is and when we're going to see that, or at least you can't perfectly predict, but we can try and figure that out.
Is there any group of people that are reliably, effectively monitoring this, assessing, and coming up with solutions? You're a private enterprise.
Yes.
You're a consultant to, I guess, government in a way, right? Mm-hmm. Do I have that right?
Yeah.
So, but are you seeing things? Let's talk about my hometown, Fort Lauderdale, Broward County, born in Miami Beach. Are you seeing things we're doing? Effective groups of people coming together. You and I just did a summit together.
Yeah. So absolutely. You have the Southeast Florida Climate Change Compact. So it's 4 counties, Monroe, Miami-Dade, Broward, and Palm Beach County, have come together to face climate change. And so one of the things they've done in terms of sea level rise is something called the Unified Sea Level Rise Projection. It says, this is the curve we're going to use to prepare for sea level rise. You might say, well, why is that important? Well, we're looking at predicting the future, right? Or forecasting. And it's not exact. We're not going to know exactly how many inches of sea level rise there are going to be in a couple decades from now. But what we can do is work together to pick a standard. And that standard allows us to plan and make sure that when we're planning, we're not building this a little higher than that, or making sure that, again, when you talk about infrastructure, thinking about how infrastructure is going to change as well. So that's one big thing, is regionally we're planning, but also companies like mine can help individuals figure out what they can do.
I think a lot of businesses probably are concerned about a negative message that would suggest we're at risk coastally, the developers, and they don't want to make change. They don't want to articulate the risk. But if we do articulate it and at the same time have solutions, we could counter almost the threat. So give me 5 things, because I heard that we could have 2 feet higher waters within like 40 years. Is that the right
2
number?
feet by 2060 based off a 1992.
Is it faster or slower than 1992, the rise?
Well, so we're seeing the rise faster, but from 1992, we're currently planning for 2 feet.
So we have to plan 2 feet, okay? So give me 3, 4, 5 solutions, something I can do as a business or a homeowner.
So to start this conversation, I think it's important to first talk about FEMA and federal flood insurance. So when FEMA is looking at your home, they have something called the base flood elevation. Right. So this is supposed to be the elevation
where
of
the water rises.
100-year flood, right? And so a 100-year flood doesn't happen every 100 years. It has a 1% chance of happening every year.
Right.
And that's very important to understand. So most homes are already built fairly elevated in South Florida. So that's the good part.
So that's number one, make certain your home is elevated.
Yes. The second is you can think about things like driveways, right? So if maybe the driveway is the lowest point of your home, you can change the way your driveway is shaped or graded to cause less flooding. That's another. Raising critical infrastructure. So maybe your HVAC unit, your air conditioning unit, compressor outside, you want to raise a little extra.
Put it on the roof.
Maybe not on the roof, because you do also have to think about hurricanes and being able to withstand Category 5.
Here. Yeah.
Oh yeah, you build higher, you end up with other things you need to think about.
Sandbags? Or is that kind of dated?
Well, I mean, that's a day-to-day, that's to stop a flood from damaging things immediately. Okay. Short-term, you can do flood barriers. So sandbags, there's a lot of different flood barrier options out there as well. And kind of the fifth thing I would think about is talking to an insurance agent and figuring out if there are ways that you can make your home more resilient and get a reduction in a premium. There's great programs out there already that will allow you to finance certain measures to harden your home for hurricanes.
Because this is an adult issue, right? You own property, you own a home. I know you're not an adult yet, but you will be someday. And I think it's very important that the upcoming generation also carry this banner and advocate and advance this. And how do we get them engaged? It's like they like the beach, right?
Well,
we want to protect their beach.
That's the thing about sea level rise, is that it's going to affect every part of our everyday life. It's not just about owning a home, because if you want to own a home someday, you want a 30-year mortgage. Well, if we don't start thinking about this, maybe there won't be 30-year mortgages out there.
What if we say to the young people today, if you enjoy surfing, if you enjoy scuba, and I've done it all, and you enjoy boating, it's not going to be fun launching your boat or diving off of a North Carolina mountain?
That's
right?
true.
So we need to deal with resiliency, because our shores are part of our attraction, right?
They are our attraction.
They are our attraction. And I think it's everybody who loves water and sun needs our shores. So maybe that's the way to get people engaged. That's all I could say to the young people who might decide to press the button and pause me. Don't pause me. Don't pause me.
Well, I think ultimately, if you care about your community and you want this to be your home for a long time, we need to think about it. And it's not just about adapting slowly to changes. It's about really transforming our community into something that will be here in the next 100 years.
Well, let South Florida be the symbol of how to deal with climate change and sea level rise. Let us be the leaders on that, as we should be. We're the Venice of America in Fort Lauderdale. So I guess that's your challenge. I'll sell the insurance and you sell the concept of resiliency.
Well, and Broward County will be a world leader in resilience, and that's ultimately what we need to focus on.
In part because of you, because you got your IQ from me.
and all of the other people working on this here.
Okay, I'm sorry. I got to give credit to some other people.
I have a question for you. So
don't make it too difficult. It's like 4:10. I don't even know what day it is.
I think it's Tuesday.
It's Tuesday.
So are there certain things that would not be considered an insured loss?
Well, that's interesting. So you remember when the Sunrise, the Sawgrass Mall flooded, and there were hotel properties around that relied on the revenue of the shoppers. Somebody who visited Sawgrass also stayed at a local hotel. So the hotel suffered revenue loss. And there is something in insurance that will insure revenue loss. And there's something in insurance that will insure revenue loss resulting from a dependent property. But the trigger for that has to be in the policy, flood, and then there has to be damage. So the question there is, did the hotel insure business interruption for flood, and was the parking lot damaged? If you can get all those elements together and then get an insurance company to want it, you can insure it. Otherwise, and I don't think they were insured.
So let me. I want to make sure I understand this. I'm not an insurance guy. So what you're saying is, I have something that would be considered an insured loss. Flood on my property damages my property.
If you have a flood.
If you have a flood policy, which if you live in South Florida, you have flood risk. You should have a flood policy. Period. The end.
Yes.
No question. And if you're not in a flood zone, then that means you get a cheap policy.
True.
Right?
So you should buy it anyway.
Great.
Right.
So we know that. Now what you're saying is, if somebody else also has damage on their property and has an insured loss, if I have business interruption insurance that looks at that property, then I could get a payout from my business interruption insurance.
You have the combination of flood, combination of that dependent property named, but then that property also has to have damage. So just rising waters, there's going to be a debate whether that parking lot was damaged or not. If it has to be repaved, it was damaged.
So there is a potential that with this nuisance flooding we're seeing, that might not be an insured loss because there's no damage caused.
Right. And you also have to have a taker on it. So as our climate changes and gets more, threatening, I don't know that we're really going to find insurers that want to insure dependent properties, floods, and parking lots against lost revenue. So we've got to create resiliency programs because not everything can be financed by insurance. There's something called risk mitigation and removal of risk completely, like don't own the hotel or figure out a way to finance it without insurance.
Because that's really what insurance is transferring the risk to somebody else.
It's the final transfer. If you can't get rid of it, contain it. Yep.
So how do you see, there's a lot of talk about
I thought
private...
I was supposed to interview you.
Well, I know, but I have questions. So there's a lot of talk about a private flood insurance market emerging.
It does exist right now, and as long as it's profitable, it will continue to grow. And it will be there. Insurance companies are interesting. They will sell risk. They will sell financing risk as long as they can make money. If you find it very hard to find a policy, I'd say get the hell out of Dodge. That's kind of scary, right?
Well, and the hope is if you build something that's perfectly resilient, then you wouldn't need insurance, right?
There you go. So
does that exist?
We save them money.
I mean, and that's
ultimately... because insurance is about a severity issue. You'll always have a severity risk. Nobody builds things to be, bomb-proof. But if you can make it terribly resilient, you can buy an affordable policy.
And it's kind of like with cars and wind, that there are certain things that cause a reduction in that policy. But because the federal government basically controls flood insurance, other than a fairly small emerging private market, there's really not those opportunities to get a reduction in an insurance premium for resilience. No. And so that fundamentally is what we need to work on.
The reason you can't get a reduction in the federal government, it's already grossly subsidized. So the rates are already ridiculously low, not representing the current risk.
It's, $20-something billion in debt. They just forgave $16 billion in debt.
I also have some numbers. Irma caused $6 billion in insured losses. That's a lot of money. $50 billion in damage, non-insured losses from Harvey. That's mostly flood losses, a lot of it uninsured. And the figure is like $140 billion for 2017 cat losses, include the California wildfire. Good news, though, nonetheless, for some reason, premiums have not gone up. It was projected they would go up, but there is so much capacity, so many insurance companies with so much money, that premiums are pretty stable still. So I think that's pretty good news for our consumers. Do you agree?
So it totally is.
Thank you.
But how I read an article that car insurance premiums, though, are going up in
Oh,
South
that's
Florida.
going up. Well, that's because of the injuries and the PIP claims and the fraud and everybody wants to sue everybody and you know the stuff that goes on. We're a very litigious Florida. That's Florida, but actually around the nation we're having trouble. The distracted driving is really big, and that's not just texting. That's putting on makeup, drinking your coffee, touching your little phone.
Children.
Bad children. Loud husbands, anything that distracts you from the road. So that's actually the biggest cause of damages.
I would believe, though, that for Uncle Ralph it would be loud wives, not the other way around.
That wasn't very nice.
So can Irma cause an increase in car insurance premiums?
It could. It's not going to be sizable because it's not the kind. I mean, they're going to price out physical damage increases for it, but it's not big. Not going to affect it that grossly. I guess it could happen if every car was underwater, but that didn't happen. So
how do you one of the struggles I have with resilience is that you're trying to get a return on your investment, and you do this through let's say there's a private flood insurance market and you reduce your flood insurance.
Never buy enough money to offset the cost of
No, but there's again all these uninsured losses that you want to protect yourself against. Well, how do you guarantee that insurance company is going to stick around in the market for long enough?
You're not going to guarantee. That's why the federal government's in the business. They stick around. Maybe too much, right? Yes, I am for small government. We don't want to put that one in. See, I said it was apolitical. I just screwed up. Anyway, thank you for joining us. If you liked our podcast, The No Risk Zone, I'd like you to go ahead and like us on Facebook. And you can even call us. We'll talk to you and share information. And we'd appreciate it. Thanks.
And share this video.
Share this video. And my nephew. Bye. Don't share my nephew.
Oh, that's awkward.